we thank everyone, as always, getting in the game, getting the conversation on. You're watching television and you tweet at what you hear on the program. We've got some questions for you. Sometimes you're giving us your thoughts and what you think we can do here on the program. So the question was relatively easy, isn't it? And it just, sometimes I just feel we shouldn't have Google search, should we? Yeah, because folks just Google it and it comes up. Of course, the second Lagos is in Europe, in a country called Portugal. In fact, that's where the name for Lagos, Nigeria, actually came from. You need to do a little bit more research there. Thank you, folks, for those of you that got the answer. That Osasu, thank you very much for your getting that debanky on the Twitter. And, of course, who else there? Charles Mose, Gabriel Ayuade, and Akindayomi Salis is a municipality in Portugal. That's where Lagos got its name from. And you know, that's our Twitter handles there. Always getting in the conversation, and we appreciate that as always. Okay, and of course there are quite a bit of angst this morning against the Economist magazine for ranking Lagos next to Damascus in Syria as the second least livable city in the world. Folks believe that Lagos should be much better ranked than sitting next to Damascus. So the discussion continue on that on the social media. Thanks, and keep them coming. Let's get back to the business of the markets. Very interesting. Yesterday, the oil and gas stock index fell about 1% and a little above that. No thanks to the big seven. But out of the big seven, we had just about 3 of them that were largely responsible for that. Mobil fell about 5%. Owando lost 3.79%. Owando is now sinking below the 8 naira, then below the 7 naira. But Mobil was just green shoot, just a slight one, but not enough to offset one of its major rival, Total. And that's what the next page of the slides shows you. That is it, 0.49%. Okay, let's move on to the markets. It's been a very interesting week. It was a brutal Monday, Tuesday and Wednesday. The market lost about ½ trillion naira, and we all thought, here comes the hammer. Then yesterday, the market suddenly found its bearings back and turned into green territory. Welcome, Obiani Jones-Sofo, one of the research analyst team at Afrinvest. Good morning.
Good morning, Bolson.
And I lose my heart anytime the market start going precipitously down the line. But suddenly, it looks like we got some tailwinds and we started moving in the right direction. Talk us through this despite the big numbers that we had from Zenith this time last week, isn't it?
Yes.
Then we had GT.
Yeah.
But we still have Access and which is the last one now?
Access yet to release their half year 2017. Yes, and UBA as well.
And UBA. Okay, so talk us through some of these sentiments for the week.
Okay, so last week we saw Zenith Bank release their half year 2017 result, which was largely positive. Interest income was up, as well as non-interest income. Profit after tax was also positive. What we saw that attributed to these gains was that it was stemming from their trading income. They did, I think, over 60 billion naira as of that, so that boosted their bottom line. They also declared an interim dividend of about 25 kobo, which translates to a dividend yield of about 1%. But however, we've seen that investors have not actually been keen to buy into this stock, which just gives you the impression that these investors are not looking for dividend yield. I mean, at a yield of about 1%, by the time I want to buy into this stock and I'm paying my brokerage fees, I mean, these gains are practically eroded. So they are looking for more of capital gains, which you've seen historically. Zenith has gained, is one of the stocks that has boosted the banking index to be the best performing index among all other indices. Also this week we saw GT Bank release their half year 2017 result, which was also largely positive. Interest income was up. Also non-interest income was also up. We saw bottom line of about 83 billion naira, which is the highest in the industry. I mean, they also declared a dividend of about 30 kobo, which is less than 1% dividend yield. And investors, just like in line with Zenith, they've also sold down on GT, which means that, I mean, if you're in the market, you're either into for capital gains or to lock in this dividend. So they've opted for the capital gains and sold down on these stocks.
And that's the answer I've been hanging around in my head for the last couple of days. Well, 25 kobo from Zenith Bank in terms of cash dividend payout, about 1%.
Yeah.
And then you got 30 kobo from GT Bank a few 3 days ago, and that's almost about 1% of as a dividend yield as well. So, folks are beginning to wonder why there's a little bit of a sell-off despite this dividend. But it looks like we're in a different trading sentiment for investors and traders who believe that, look, I would rather take this rally, take capital appreciation on the share price and go home with that rather than wait for dividend. So it looks like that is changing. Let's push out the GT Bank share price and put that stock slide chart out there from our friends at Stockman. Thank you very much for picking that. I'm sure you do this on a daily basis with your colleagues at Afrinvest. But this is from Stockman. Thank you, folks. Look at where the share price of this, and I call it the Orange Bank. Why would the color of orange there? But this is what they call it. Yeah, the red one is there. Then you have those oranges, a blue one, and all that. But this looks like. But this is GT Bank, Nigeria, one of the top 5 banks. And look at that share price moving on that across the candlesticks. And you think this is the level where GT Bank, do you think at this price level it justifies the earnings